monetary policy has been turned upside down.
Yeah.
Where an actual raise in the interest rate cap may actually expand liquidity because more people will now qualify for that ceiling. So one of the big problems the CBK is having is what are going to be the actual implications if we start fiddling with this rate. So I don't expect to change, to be honest.
I mean, at this point, looking at all the factors we have, we've seen job losses coming through from around March, end of first quarter. And in fact, the first quarter itself had its own seasonal job losses because of drought. Private sector credit growth has been going virtually nowhere. Investment has been going down. Companies are running down inventories. The central bank can't really afford to sit back and say, we're going to leave things as they are right now, can they?
They can't afford to say that, but I think they're in a very difficult position because of the factors that you've mentioned. Of course, if you look at the broader economic context that's squeezing business, we've talked about the drought, which is about 30% of GDP and all the businesses locked in there.
Yeah.
When we're already also being affected by the cap, which obviously has hit the financial sector, which is about 10%. So already about 40% of our GDP has been fundamentally compromised. And then when you bring in the conversation about the ongoing elections that have just concluded, that again has dampened business activity. Now, one of the things I think we need to unpack a bit further is how this cap has dampened appetite for credit. I think in the beginning there were a lot of very aggressive applications into banks for new credit lines because people thought they would benefit from the cap. But of course we've seen that there's actually been a contraction in liquidity as banks pull back because of risk factors. So I think since we've been going through that for about a year, I think the real danger that I see is that we are engendering a situation where there's a dampened appetite for credit because people don't think they're going to get it. There's a reality where people have not gotten the credit lines that they ought to have or that they usually qualified for, and therefore have changed their business model to adapt to this lack of credit. So what's happening is that not only are particularly small and medium enterprises being hit by the cap where everybody's sort of pottering along at a very suboptimal level, what's happening is that managers are having to change their business model and their business structure, their employment levels, to deal with the fact that they probably won't get credit lines as long as the cap is in place.
The question then becomes, next year, in terms of growth, once president is sworn in, perhaps a political storm blows over, might not, we'll see. What sort of growth levels are we looking at, given all the factors we've discussed?
Well, let's start with this year. I don't think we're going to hit 5%. I think we'll be closer to 4.9%. I think going into next year, depending on the political situation and sort of the investment decisions that have been held off, and whether there is sufficient for domestic and foreign investors, whether there's sufficient political stability to start making those investment decisions. If that happens, then I think we'll begin to see some of this easing, because we'll have cash flow coming into SMEs, not necessarily as credit, but as new orders, as business expand, as larger business expand their activity and get more productive. So I think moving forward, I believe the CBK is in a very difficult position. I don't think they're going to touch those rates as long as the cap is in place. I think the next step is really for a very clear sort of articulation to the decision makers in government that the cap is a populist experiment that didn't work, and now we need to start ramping it down or changing the way it's articulated. I think that's another practical thing that we can do. And I think finally what we can do is really leverage county governments to do what they can to insulate private sector from a lot of the problems that cause money leakage in the first place. If you look at the problem of financial mismanagement at county level, where we have small, medium and informal businesses that are larger not getting paid by county government, that's another massive thing that government can do, is just pay people. Just pay people what they're owed, and then you'll see some of this easing.
It's also worth pointing out that ever since Kenya introduced that law limiting retail lending rates to no more than 400 basis points of the policy rate, Kenya Central Bank has retained the CBR at exactly 10%.